Hey friends, Lucian here with the Bullish Bears team. This video is going to be about how to trade a call credit spread, otherwise known as a bear call spread. So again, in the options world, sometimes you'll have 3 or 4 different names for the same thing, but a call spread or a call credit spread is also known as a bear call spread, as well as a short vertical spread. So again, several different names, but my whole point being is this video is going to show you how to do a bearish call spread, basically. All right, so what you want to do, kind of just taking a look at Apple right here, I'm going to place a live trade. You'll see I'm in my Thinkorswim virtual account right now, so this is my paper trading account, just to show you, because I want to show you how to get in and out of the trade, show you how easy it is to do, and the psychology of behind why you'd want to do or take this trade, right? So for the sake of this video, we're going to just say with a call credit spread, you believe price is going to go bearish, or you want price to stay below your short strike. Your short strike is going to be the area that you want price to expire below by expiration. So let's just kind of look here and say, let's say look at this peak value or this peak right over here. And say you think that you want price to stay, or that price is going to stay below 125. Again, you don't do this stuff based upon hunches or guesses. You have to understand technical analysis. This is the stuff that we teach you in our courses and in our community and in our trade rooms every day. But so again, for this video, let's just say you believe by expiration, you believe price is going to stay below 125, right? So what you would do is go over to the trade tab over here, and you would look on the call side, because remember, with a credit spread or a call credit spread, you're selling to somebody else. So somebody else on the other end is a buyer. So they're bullish, right? Or they're going on a bullish route. You're going bearish, so you're going to sell it to them. So what you'd want to do is you'd go over here to the short strike or the strike area of 125, right? So what you would do is to place this trade, or again, before I place this trade, this probability of out of the money, OTM, is a great column to add into your brokerage account that you're using, so you can see your probability of success on the trade. So just right off the bat, again, there's so many different ways to do credit spreads. I'm not going to go into all that in this one video. You'll see right off the bat, selling this credit spread gives me an 85% chance of being out of the money. So I have an 85% chance that by expiration price will be below $125. So that's great odds. That doesn't mean you take this trade overall. Again, you have to know your risk, how much credit you want to receive, all that good stuff. Again, we break this down in our courses and what strikes to look at in our next level library. But for the sake of this video, let me show you how to place this trade. If you're using the Thinkorswim platform, you would just right-click, click on Sell, and go over to Vertical. So right here, you'll see the top part right here is the selling, right? So you want to make sure the sell is up top. You'll notice by the red color, that means it's sell. But just make sure your sell strike is up top. And then it all depends on how wide that you make your strikes to determine how much credit you receive. So you'll see this is one strike right here. If I went to 2 strikes, you'll see the credit increases. If I go to, let's say, 5 strikes, you'll see it goes from 22 credit to 42. And then if I went from, 5 to 10, right here, credit goes up. For the sake of this video, we'll do an in-between and do a 5 with strike right here. Again, what happens is you receive more credit. The more credit you receive, the more max loss or max risk that you get. So you'll see when I place this right here, I'm risking, 457 to make $43. Again, not great. However, the odds are in my favor at an 85% win ratio, right? So again, if I went to 10 strike, 125 to 135. Oops, I think I'm going the wrong way. There we go. 135. I'm risking, 950 to make 60 bucks. Again, there's reasons to make this trade. You're not going to allow yourself to go to max profit. You'll cut your losses small, but I just want to show you the more you widen your strikes, the more credit you receive, but also the more max loss that you receive. Again, how you increase your probabilities of success, take profits early, keep your losses small. So don't let, bigger max losses scare you from taking it. I just want you to see how it breaks down when you're going to place the actual trade. And be aware of the risks associated. Again, there's risk with any type of trading style. So with this one, we're going to do the 125, 130. And let's just go right here. And you'll see when I confirm the order, right here, always make sure you check your order box. This is, again, a reminder of why paper trading is so important. If you're new to the world of options or just trading in general, Thinkorswim has an amazing paper trading account. You can practice, right? Practice trading options using Thinkorswim's platform, or whoever your broker is, use their virtual platform. So if you're confused or like, hey, how do I do this? I don't know what to do. Practice in a virtual account. Same things goes with our trade alerts. We do offer trade alerts within our membership. So we do credit spreads, debit spreads. We also do naked calls and puts at times. So, before you follow our trade alerts, make sure you practice taking them in a virtual account, right? So if you want to get in on the action, yes, of course, everybody wants to make money right away. But if you're new, don't go following our trade alerts unless you know what you're doing. That's why a great way to do that is practice trading them in a virtual account, right? So you'll see we call out trade alerts all the time throughout the week. And, this is how it breaks down. So make sure when you're taking our courses, look on how to trade, calls and puts. Look and see how we do debit spreads and credit spreads so you know how to input these orders. But this order right here, again, this is a call credit spread, otherwise known as a bear call. And you'll see the name of it right here. It says call credit, right? So I just want to show you again, I'm going to place send or press send. This order is going to confirm in a moment, and then I'll show you what it looks like on the back end. So you'll see down here that my order is filled. You can see the position down right here, but I want to go and take you right over to the monitor tab and show you right here. You can see right down here, I'm in that Apple credit spread, right? So when I open it up down here, you'll see right here, the selling one is at top. So you'll see it is a call credit spread right here. So I want to show you how to get out of this trade and how simple it is. So just want to show you again, this is what it looks like. You'll see the two legs right here. And then you just watch and see that price kind of moves up and down throughout the process. Again, depending how much time value, again, you'll see the price just goes up and down, right? So to close this trade, if you want to get out of it, it's very simple. You just right click on create closing trade, and then you buy it back. Remember, I sold it originally, so then you buy it back to get rid of your position. So this is where you'd obviously, don't just rush to get in and out of the trade. But just for this video, I'm just going to just put this order in just to get out of it. Again, you want to make sure you use limit orders, get good fills to enter into a trade, and then also to exit the trade. But, to confirm and get out of this trade, I would just click confirm and send, press send. And you'll see, obviously, I'm in a virtual account. It fills pretty quickly. But normally, if you're doing really large cap stocks, they fill pretty quickly on options trades. If they're not a reputable company or the bid-ask spread is very wide or the open interest is not there, then it might take longer or be more difficult to get out of the trade. But stuff like Apple, Netflix, Google, stuff like that are highly liquid stocks. So now when I go back after that order filled, you'll see when I open this over here, the position is now gone. It's liquid. I'm no longer in it. So that's how you place a call credit spread, otherwise known as a bear call spread. That's where you are bearish. Remember, you're selling to somebody else that's taking a bullish position. So you're an option seller. You're just selling them the contract. And that's how simple it is to place these trades. It's all done automatically within your brokerage account. So you don't have to go through the process when you hear of writing an options contract. You're not having to go and actually physically write it. It's all done. It's being sold, done in the back of your brokerage account. And that's why, again, I can't stress it enough how important it is to practice paper trading in a virtual account. And that's where, again, our trade alerts are very helpful. Number one, they're great ways to grow your brokerage account. We call out good trades. We don't win on every single trade, but obviously we cut our losses small or keep our losses small, let our renters run. We take profits along the way. But if you're new, come into our community, try us out and practice taking. Again, our trade alerts are a great way to practice implementing them into a paper trading account until you feel comfortable. And then when you're comfortable implementing the strategies, then you slowly scale your way up trading with real money. So hopefully this video on call credit spreads helped you, and we will see you in our community.